Welcome to Barclay Pearce Capital's AI Investment Outlook 2026, Investing in the Next Global AI Cycle. Artificial intelligence has rapidly evolved from an emerging technology theme into one of the most significant investment cycles shaping global markets. Today, we're joined by David Keane, CEO and co-founder of SCX.ai, alongside Michael Bogoevski, head of ECM Asia at Barclay Pearce Capital, who will both lead today's discussion. Michael and David will explore where we currently sit in the AI investment cycle, the infrastructure required to support the next phase of adoption, the growing importance of sovereign AI, and where opportunities may be emerging as the sector develops. Before we begin, please note that today's discussion is general in nature and does not constitute personal financial advice. Please consider your own circumstances and seek professional advice before making any investment decision. Michael, I'll hand it across to you.
Thank you for the wonderful introduction, Scarlett. And David Keane, welcome to BPC. It was great to have you on board.
Great to be here. Thank you so much.
So we've got a bit of a discussion ahead. We're going to sort of do close to 5 or 6 key questions and obviously anything in between. Let's first talk about the investment cycle. So the AI investment cycle over the last couple of years. Now, I've come across it, and my first experience was around 2023. When we're at the very low of technology stocks around late 22, and then we saw this amazing pivot. And come early 2023, we saw the release of the first LLMs. That's, I think, where the majority of people have really understood or come across it in a practical sense. But we know AI goes much longer and for decades prior to this. So firstly, where are we in the cycle and what's ahead?
Well, that's a great question. Look, I think post 2023, we saw millions of people all around the world get started using AI in their daily lives, the whole chat GPT moment. But post that time, we've realized there's a lot more to the benefits of AI than just what's called the chatbot. And we're starting to see, particularly in the last year, people start to realize that there is an opportunity to be able to build AI-based applications, and this lovely word agents, which we might talk more about, that can actually perform work in business. And we've seen the gap really close between organizations that were experimenting with AI and those that were deploying, actually building real applications and agents to automate workflows and to improve business processes. One analogy I'd use is to say we're kind of in the Cisco era of the internet. For those who are around when the internet itself came about, we knew that there was going to be a huge opportunity and business would change with the internet. And I can remember myself how many companies went and put E in front of their name, E this and E that, talking about building the applications on the internet. But if we think about it, where the return went to many investors was investing in the picks and shovels, if you like, the infrastructure underneath the applications that were built on top of the internet. And you can think of the Cisco as a company. I'm sure many of the folks on the call know Cisco and the tremendous returns they delivered for investors. We're starting to see something similar in AI. Every one of these AI applications needs tokens, and we'll talk more about that today, from an inferencing service, in the same way that all of those companies and those internet companies needed Cisco underpinning the network to create their business. So I see from an investment point of view, this infrastructure layer becoming more understood by investors globally as they start to allocate capital into the different parts of the AI thematic. Now, there's a lot of noise again at the application level today. It's the same as there was in the internet at that time, and there'll be a lot of failures that happen in AI applications. But I think the companies that are actually moving the capacity, creating the tokens that are needed to power those applications are going to be the ones that deliver for investors.
Thank you. That's a great answer. So I think that segues into sort of the next part of today's discussion, and that's now separating the software side versus the infrastructure side. So we are hearing lots of terminology around hyperscalers. We're hearing a lot about large infrastructure and data centers, and we are starting to see them pop up all around the regional seaboard of Australia. Now, how do we disseminate, or how do we differentiate between the companies? Where is the next couple of years lie? Is it more about infrastructure, or is it continued software development within that?
Well, look, I think there's going to be all parts of that AI thematic that benefit from the ability for Australia to create these tokens, again, that word that simply is the measure of the AI output. Now, if we're going to create the next Atlassian, the next Canva in Australia, we need those folks to have access to this AI capacity to build it upon. And we have seen, I was reading in the news this morning, more news about big data centers and big investment and big power and water cooling and concerns from citizens, and maybe rightfully, about what is the impact of this significant investment in the eastern seaboard and I think across Australia. Look, we think that whilst it is necessary for Australia to be a leader globally in this infrastructure space, to have access to this capacity so that we can build these applications and agents and build these new companies, but we think that one of the approaches and one of the opportunities is to build focused AI capacity. Not this general purpose, build it and they will come kind of model where we sell to the hyperscalers you mentioned and we make, a lot of money come in from some American or Chinese big companies. There is an opportunity to actually make the pure capacity that is then used by Australian organisations and companies and organisations in the region to build those applications and agents themselves. We believe it's necessary to have that so that we can create these new companies and help existing companies to automate and modernise their flows. But it has to be done in a way that's both economically and environmentally viable for Australia. We need to recognise that we want technology here, but we also care about our environment. And, we're in many ways a small country that doesn't have access to the same scaled markets that North America and Europe do. So whatever we invest has to be economically viable. It has to have a more modular investment strategy. And it also needs to be focused on delivering that capacity in a way that understands the concerns Australians have about power and water. And that's one of the things that we're encouraging all Australians to do, is look at this and say, what are the ways that we can get there? And certainly at SCX.ai, our vision is to create that capacity, but to do it in a way that uses an order of magnitude less energy and does not use water cooling or the chips, so that we can bring that capacity to all Australians in a way that people feel more confident in doing. And I think that's one of the opportunities. And we're seeing, customers now come to organisations like SCX, where they need access to that capacity, but they want to do it in a way that is more viable. And I'm sure we could talk about some of the economics behind it, but there's some significant costs involved in AI, and people are starting to experience some concerns over that.
Okay, so thank you for that. And I think that's a great intro. And let's start talking now about the unique selling features and the unique features of SCX in general. So starting off with sovereign AI. This is a very new concept. I think I've come across this concept myself in business, especially in the cloud services business, when I would be selling out on the road and I was coming across particularly government contracts or particularly banking contracts, and we were required to provide some form of sovereign cloud service. So can you sort of elaborate on this, and what is this excellent, amazing feature that SCX can offer?
Well, look, I think it's really about what do we need to make AI applications and agents successful and really deliver for all Australians. And there are a bunch of government and regulated industries that under the Australian Privacy Act and Copyright Act and a number of our laws require them to treat information very seriously. And, sovereign AI is simply a phrase that we use to describe building the capacity in the way that guarantees the management of the data, where it goes, under which regulation it runs, how it's used, who has operational control. And that is essential for organisations that want to build these new tools using AI, but need to stay in compliance with some of those key Australian laws. We recently had, just last week, the Australian Signals Directorate, part of the Department of Defence, come and warn company directors that they could be liable for the inappropriate use of AI. So it's not just a question for IT anymore, it's a question for company directors. How are they going to protect their information? How are they going to protect their customers' information? And how are they going to do that with the appropriate use of AI capacity? We can't just stick our head in the sand and say we're not going to go with AI because we're concerned about these privacy and control issues. We have to embrace it, and we need access to capacity like SCX is building, so that we can actually build those applications and stay in compliance. But I think sovereign AI goes further than just compliance with the legal system. It also is about company intellectual property. We're starting to see customers now really start to get concerned about what happens to their information and maybe even their customers' information and how they can use that as a differentiator. I have a wonderful example for folks on the webinar here. We're working with a really amazing, innovative company in Melbourne called ElfWorks. ElfWorks has a vision to make every accountant in Australia 10x more productive by using AI and other smart tools. And of course, to do that, they need those folks to feel comfortable using their system and actually putting in the information that they collect from their customers into the tool to make it to help them with the way they work. And it was essential for ElfWorks to be able to guarantee what happens to that information. How can they be sure that it's not used to train an AI model, or it's not put into someone else's data set? It's, these kind of things are essential for them to be able to offer a service and to differentiate their offering from simply someone just going to a US provider. And so I think ElfWorks was visionary in understanding the importance of providers like SCX, where we can actually guarantee that control. We know exactly where it goes, exactly how it's used, exactly who has control over it. And that's offering them a chance to be able to grow their business and bring new customers into their network. I think we're going to see more of that. But yeah, I'd like you to think about sovereign AI as, sure, of course, it's protecting Australia's information. Today, millions of Australians are sending their information, their most critical and secure information, offshore just to use AI. And we think it's time for that to change. And that's one of the reasons we built SCX, so we could provide that capacity for all Australians. But I do think even companies are going to need sovereign AI to manage their intellectual property and ensure that they are protecting their customers and their own information.
Wonderful. Okay, so let's now turn towards the investment proposition in general. So far we talked about sovereign AI, but let's now talk about the chips, the cost of things, because this is something else quite unique, and maybe put in reference to perhaps some of the LLMs and the cost of operating an agent today.
Mm-hmm. Look, I think that cost is a significant challenge for folks. It's well and good to say you're going to implement a new workflow process, you're going to automate things with AI, but if that becomes as costly as doing it with a person, that can become a challenge. And I'm sure people on this webinar have seen news articles coming from the US where they talk about the impact of cost. I saw one about the way that folks like Uber have been burning through their entire yearly AI token budget in 3 months. I mean, this is a real concern for organizations before they even start, is how they're going to be able to fund it. So one of the things that's important is to fundamentally build an efficient operating model so that we can build the capacity at the right price. So at SCX, we've approached this by focusing on building our system using specialized AI silicon. We've partnered with a company called Sambonova that makes dedicated, high-speed and efficient AI chips that perform this inferencing task, the creation of the tokens, at more efficient outputs for every watt of energy you put in. And it can be between 2.5 and 5 times more efficient. So every watt of energy you put in, you get more tokens on the outside. And they can also do that whilst delivering higher performance. There's some numbers in our IPO prospectus from Frost & Sullivan that talk about Sambonova being between 4 and 9 times faster, which actually is becoming a more important thing. I always joke, nobody wants a slow AI. And I think in business, high performance AI can actually make a difference in how you use it. And you combine that with the way we've built our infrastructure that requires no water cooling, which means we can run our system in what the industry kind of calls a cloud data center versus a AI data center. And I'm sure people are hearing these terms a lot, the brand new building next to the ocean, big water pumps, massive power infrastructure, huge cost, bulldozers. All that stuff might be necessary for training. But we believe for AI inferencing, we can build using existing cloud data centers that we already have in Australia. And we can deploy those as customer demand comes. So we add all that up together, and SCX can make these AI tokens and offer our customers as much as an 80% saving compared to some of these proprietary foundation models. And we can do it all here in Australia. So I think cost is going to become an important part of it. But look, it's all about the structure. And by focusing on the inferencing market and not doing the training market, not selling to the Metas and Googles and the hyperscalers of the world, and focusing on that productive capacity, that we can use to help customers build these agents and applications, we think we can add a lot more value to the economy. So, my view is that cost is important, but it goes together hand in hand with sovereignty. We spoke about before, is that it's no good having a cheap AI if we're risking our information and our sovereign control of our data. They have to come hand in hand.
Wonderful. And yeah, you're right. I think definitely in the last couple of months where we're starting to see some hyperbolic statements from a lot of the news agencies around the token costs, token usage, and also the energy security and the energy proposition of data centers. It's interesting to hear that companies like yourself are starting to find ways to solve for this if we're ever going to get ahead in the next decade or two.
I think it matters to
us
Australians. It also matters,
Yeah.
I think it matters to all Australians. And one thing I always say is that we have a responsibility to talk about the fact that Australia can compete on a global basis. We have some unique advantages in our country, in terms of the way our country is set up. And if we use the right technology to underpin these AI factories, we believe we have an opportunity to capture a section of that growth, but also do that in a way that's responsible.
It must be such an exciting time for yourself, given that, after so many decades within technology and seeing your own company come to market this week. For myself, when you look at the investment landscape, the Australian proposition of an AI-based company is so rare at the moment. We see lots of banks, financial services, and mining companies always coming to market with capital raisings, but to have a company like yours coming to the market is something to definitely watch, and we'll be watching this very closely in the coming years and how you evolve the company.
I think that's true. In fact, I would say to folks that what we're seeing, and I was very fortunate to do a pretty substantial Australian investor roadshow here. And then I spent time in the US and talked to investors in New York and on the West Coast as well. I think pretty clearly investors are seeing the AI thematic as not a temporary change. It is a fundamental multi-decade change in how the economy works. And that being able to own the capacity to be able to create these tokens, to create this AI that then can be used in those applications and agents is really about that long-term view for adding value over not just a short-term cycle, but over what we think is a longer term play. And I think that's one of the things that we've done at SCX is built a model that gives investors access to the AI thematic, but does that in a way that is using these smaller chunks of deployed capital, where we can deploy the capital in smaller chunks as we see demand grow. And it's trying to find that combination of get the capacity out, have enough that we can really meet the needs of our customers, but also work to deploy that in a way that we can measure, see the results of that, and grow from there.
Okay, so final question, and this one may take a while because I want to break it down into two parts. So this is about the investment outlook, and not just for SCX, but the ecosystem around AI. From your lens, how do you see the current outlook in terms of development, the issues that we're facing as a whole ecosystem, and then maybe starting to hone that question onto SCX over the next 12 to 24 months?
Look, I think many investors are still looking at AI as a general thematic. I think some of the ones that are ahead of the curve are breaking that down into different parts of the thematic. They're starting to understand the data center business, the buildings, if you think of it that way. Then they're understanding the compute layer, which is kind of what SCX is. We're in the compute model and software layer. Then there's the application layer on top of that. People are actually creating applications or agents using that AI capacity. And I think investors are starting to break up the general AI thematic into those kind of buckets. And if we think about those buckets, certainly the data center side, we've seen tremendous capital go into data centers, over the last few years in Australia, significant build outs of the buildings. I think that's something that people are starting to understand more. In terms of the middle layer, that compute model software layer, I think that is a new area in the market. And I think investors are starting to get very intrigued to understand that, and they're putting it on their radar to learn more about companies like SCX and others that are building in that compute model and software side of the AI thematic. And then you've got a number of really interesting, innovative Australians building the software layer, building tools. We're working with an amazing company called Doccy, D-O-C-C-Y. And what they're doing is creating AI that's specifically designed to help automate the process of patient-doctor engagement that often happens before a consultation. And they're using SCX capacity to do the automatic transcribing, but also the processing of that information to help doctors be more efficient, be able to treat more patients and have reduced waiting times for patients. And so we're seeing the application layer produce some really innovative approaches here in Australia. And I think we've got some great entrepreneurs and folks here who are looking forward to using the capacity that people like SCX build that can then enable them to create these new application and agents on top of it. So I think for investors, one of the challenges is to understand the AI thematic. Where do you see, or where do they see the opportunity to play? Where do they see the growth? I think the other thing I would say is that we are seeing investors look even deeper and start to understand when AI is just a feature, so a company adding their AI offering on top of their existing product, and what does that mean, versus truly AI that is the core product. And I think it's been a bit challenging for investors over the last year or so to understand. You mentioned in your remarks that we've seen a lot of companies come out and add an AI feature to their product. Well, what does that mean? How do investors translate that into future outlook of revenue? So I think that's going to be something that people will look to. Who owns the pipe? Who owns who owns the underlying capacity behind that actually can be used to build these capabilities? And what is the role of the application layer kind of going forward? And one of the ways I think about that, of course, is understanding the AI adoption curve and where are we on that transition to AI being part of the workflows for every organization. And maybe something that's worth talking about more is what do we need to get to that next level of AI adoption? What's happening now and where are we? And something maybe to talk about more later on as well. We see, number one, if we're going to create that future, if we're going to build the next Atlassian, the next Canva, if we're going to create more Dockies and Elfworks, we need AI inferencing to get cheaper and faster. Not the training of models, but the inferencing, the creation of the tokens. Every organization that deploys AI at scale is going to need that inferencing capacity continuously. It's not a once-off, they'll need it all the time. And the cost of inference is almost a tax on AI deployment. And so the idea that we can deliver more output for less energy is a key factor in addressing that. Secondly, and we talked about it earlier, but data residency has to be solved. We don't see data residency as a nice to have. It's essential. And I think that's going to become a procurement requirement. Organizations are going to stand up and start saying, we want to be sure that our intelligence is processed appropriately under Australian laws, under Australian oversight, and without risks from international legislation like the US Cloud Act that can impact access to that and, of course, breaching things like Privacy Act. So we think that's important. It's not about routing queries through Singapore or the US. It's about how can we do it here in Australia and make it a general purpose enterprise solution. I think the third thing is it's also about how do we combine performance into that? How do we make sure that the AI we're using is high performant so that when we build these applications and agents, we can deliver it in a way that is actually going to work, and it's going to deliver the performance that gives us a business advantage in how we actually run our organizations. So I think that's going to be more in the conversation as we go forward. So look, I think it's a very interesting time. I think it's certainly challenging for investors. I think for many folks to understand all these things moving together. It is a very dynamic market. But at SCX, we're committed to building what we see as an important part of that infrastructure, the capacity to make the tokens, a focus on doing it efficiently, doing it with high performance, in the way where we can guarantee the sovereignty of that information. And we believe if we do that, that'll be assisting to grow the overall use of AI in Australia.
David, that's wonderful. And I'm really looking forward to this week's IPO. You must be excited after seeing the growth of your company and getting it to this point. We look forward to the next couple of weeks. We'll absolutely have you on in several months, and we'll do a post wrap of how the IPO went and the first couple of quarters. And we look forward to seeing you again at BPC. Over to you.
Anyway,
Scott.
thank you so much. Thank you so much.
Thanks, Michael. And thank you, David, for joining us. Artificial intelligence is clearly developing well beyond the applications most of us interact with every day. As adoption continues to accelerate, understanding the infrastructure, economics, and businesses supporting that growth will become increasingly important for investors looking at the sector. For further information on SCX.ai, please refer to the company's website and relevant investor materials. And if you'd like to discuss the broader investment themes covered today, please contact the BPC team directly. Thank you to everyone who joined us for the AI Investment Outlook 2026. We look forward to seeing you at the next Barclay Pearce Capital webinar.